Welcome to Business Shark. Our topic today is Netflix working capital. And you may think working capital sounds a little bit boring, but trust me, this topic has more twists than a Netflix crime series. And we start with this chart. It shows Netflix positive working capital all the way along until 2019 when it sharply drops. It even becomes negative. And the same thing again in 2021. What is happening? Why this sharp drop? To answer this mysterious question, we have to go a step back and ask ourselves, what the heck is working capital anyway? Working capital is simple to explain. We have current assets minus current liabilities equals working capital. But what are current assets? Current assets are assets that can be converted into cash within 1 year. For example, obviously cash and cash equivalents or inventory. So, and what are current liabilities? These are obligations that are due within 1 year. For example, accounts payable or accrued expenses. But why working capital is even important for investors? Because working capital shows the company's liquidity and its short-term financial health. That's a really important number. Let's look back on this chart that shows Netflix working capital. Remember in 2019, here's a sharp drop, and in 2021, a sharp drop in working capital again. And there are only two options for this. First, Netflix lost a lot of current assets, or second, Netflix current liabilities like bills exploded. And either way is really unpleasant. So let's dig into it and find out what happened to Netflix working capital. Now let's look at Netflix assets. We have 2018 and we compare to 2019. You remember that's the year when Netflix working capital sharply dropped. And there's one obvious point. Look at current content assets. And they are around 5 billion in 2018 and 0 in 2019. I repeat, 0. And that has an obvious impact on total current assets here because they sharply dropped from 9 billion to 6 billion, and that explains the decline in working capital. But the next question is, of course, why? What happened to current content assets? And the answer is simple. Netflix moved them to non-current content assets. So this number got up and this number went down. And they did it because of simplicity. So you just have Netflix content assets. They do not split them anymore. And that means that this decline in working capital has a non-economical background. It's just an accounting change. But the next question is, of course, what happened in 2020? Because despite these changes, in 2020, working capital increased again. And the question is why? The answer to this question is quite simple. Look at Netflix free cash flow. It's negative in 2019, it's negative in 2021, the years when Netflix working capital was negative, but then in 2020 here and since 2022 Netflix free cash flow is quite high. And if you generate more cash, you have more cash on your balance sheet, so you have more current assets. And that explains Netflix rise in working capital despite the change in accounting. So what have we learned today? First, Working capital is an important metric for companies. Low working capital can indicate a higher risk of bankruptcy. Second, Netflix working capital decline was caused by a change in reporting and had no economical background. Third, Netflix's ability to generate more cash led to higher working capital despite the changes in reporting. So Business Shark community, I hope you enjoyed the video. Subscribe and like, and never forget, attack and bite.